So I think the Indian markets are reflecting the strong macro uh, we have, and in the previous episodes we have discussed the strengths of the Indian macro, how the country's balance sheet reserves are looking really strong. The vulnerabilities that existed in the past are no longer evident now. How corporate India had deleveraged over the years. Our bank balance sheets are well placed to really invest in the growth opportunity that presents itself. And the other backdrop of this is how India is looking in the context of the global economy, right? Because the global economy is on a weak footing. In fact, what we spoke about in the previous episode, that this year we started with the fact that US growth was supposed to come down and China was supposed to really propel growth, but really it's played out differently. US growth has been strong and China has really disappointed. But I think what is going to really weigh on global growth and the outlook for it is the fact that some of the China's challenges are not just cyclical. Right. And so while we have had this swap that maybe a pullback in Chinese growth to some extent has been offset by the better US outlook. But the fact is that US was more of a cyclical slowdown, right? China's challenges appear to be more structural. There are balance sheet issues, which I think you and Neelkant have discussed more at length in the previous episode. So I think what that means is that global growth outlook is not just of a cyclical slowdown. And I think my view is both 2023, 2024, aggregate global GDP growth will be 2% or lower. Right?
And that is good or bad or ugly or what?
Yeah, so it's not great news for India. Rarely has Indian GDP grown over 6% when global growth has been less than 2%, right? And the headwinds are visible for India today as well. So if you look at our export data, right, our exports X of oil, right, because in the past 12 months, oil exports have really taken off. The fact is, X of oil, our exports today are lower than what they were in 2021, 2022. Exports on a year-on-year basis, YTD are down about 9-10%, right? So that is clearly a headwind to our growth. And so I don't think we can get our optimal growth when the global outlook isn't great. Having said that, India is one of the economies where the larger driver of economy is internal demand.
Right.
Really, in some senses, about 80% of demand is internally generated. Right, and this puts us in a relatively better position to most other economies, which will be more challenged in this environment, particularly emerging markets. So yes, it's not great news for India. From absolute point of view, we will not hit our desired growth rates. But again, from a money flow point of view, where growth differentials matter as much as absolute level of growth, I think it still means that India is an attractive destination.